Hi, everyone. Welcome back. Thank you for those of you who were able to join me live on my webinar yesterday. I appreciate that. This is a follow-up. This will be the extended version to that video. I thought that there were some things that kind of came up that I wanted to circle back and touch base on. And one of those was inventory and outstanding checks. So I wanted to make sure that I went over those on screen, especially before I wipe these financials clean, okay? It just made more sense. So the first thing I will always do anytime I jump back in, doesn't matter if I just was working a few minutes ago, I always pull up the financial statements just to make sure I'm not crazy, that the net profit still remains the same. So you can see this is basically the conversion that I did. Okay, everything is still exactly the same. This is my QuickBooks on the right and my Studio Financials on the left. Okay, I'm going to move them out of my way, and I just wanted to talk about inventory. Okay, I thought about just saying, here, check out the inventory video, but it made more sense to kind of continue on with the information that we were already working in yesterday, right? So I wanted to kind of show you, and let's talk about it before we just go in and start posting things, okay? So if we really had an asset, let's just say these financials are right, but oops, we forgot to count, I don't know, let's just say an inventory. We purchased, I don't know, 100 candles, okay? So let's just say we paid $1,000. Okay, I want to keep this simple in terms of what we're talking about. So your inventory asset would be listed about here, right? So these are right here under your assets. So what would happen in order for you to purchase those candles, we're gonna have to pay for them. And it's either gonna come from our Amex or it's gonna come from one of our checking or savings, right? So either way, we're gonna have to make a payment to the vendor to purchase these goods that we wanna carry in inventory. Whether it's 1,000, 10,000, whatever the case may be. One of either our credit card balance is gonna go up because we need to purchase that, or one of our bank accounts is gonna go down by that amount, right? Does that make sense? So that's how we would get the asset. That's what that asset would look like. If we had the asset but we didn't pay for it, we must have paid for it long ago, we just don't know about that payment and it just randomly now belongs to us, which tends to happen in interior design business, right? In a case like that, there is a way to post that. We still want to post it and account for it correctly. The reason why I'm so adamant about the processes of inventory, and I will probably continue to make more content on it, is because I feel like everybody typically tends to make it a lot more cumbersome than it is, okay? And I always say, getting things to inventory is literally 3 steps. It is setting the item up in inventory, purchasing the item to inventory, and then receiving it. 3 basic steps, but I think people want to dance around that a lot or cut corners, and I don't know what the case may be, but I see it happen a lot, okay? Or they want to code things directly to cost of sales, okay? And this is probably drilling down a little far into it, but I do want to mention, you should never have anything in studio coded directly to a cost of goods or sales income account of any kind. If you feel the need to code anything to either of those, from money out or anywhere else, pause, because that you're doing something wrong, okay? And I will make a follow-up to that, okay? I don't want to stir the pot, but I also don't want to fly too far off the handle. So reeling myself right back into the main thing is getting back to inventory and putting it in here. So if we skipped it, usually it needs to go back and be addressed. And I just kind of wanted to point out the accounts and what really happens in the real world should we really buy these candles or whatever it is to sell it, right? The reason that we have inventory is because we buy goods or products with the intent to resell it to other customers, right? That's what inventory is, whether at a retail location or otherwise, even in interior design firms. That is what we're doing. We're purchasing these, or sometimes our clients are returning it from a project, right? And are we just tossing that? No, we're taking it back in. If we're not returning it to the vendor because it's a custom item or whatever the case may be, we're not able to return it. And I do know a lot of interior designers, depending on the situation, will take it back. So in those cases, when we take it back, there's still a process to be had there. And I don't just say just take it in and we don't have a record of it. The reason why it's so important to also show it on the books is that should we have to insure our business or our even just our inventory, you want to have a number to go along with that, and that's how you put a price on it. That's also how you get the accounting to appear correctly as well, but that's another video. Okay, so that being said, I wanted to take a moment and just add some inventory here. I wanted to make it really basic. I'm just going to do one item, right? So jumping back, that was one that I didn't do, and there are instructions, but I didn't go over that in my webinar. Okay, so because it's one from the subledger, and I talked about that, and you'll hear me talk about it in a lot of videos. Subledger accounts cannot be journaled in or out of, and for very good reason. Okay, but that being said, there's only 5 accounts in Studio that happens to be with. It is AR, AP, client deposits, vendor deposits, and inventory. You cannot journal out of those. The reason for that being, and I will just show you over here, is when you can pretty much journal out of any accounts and disregard these because these are my contra accounts. But if you looked, you couldn't do an accounts receivable. I mean, these are my contra accounts. They're for cash basis, but you can't journal out of those. Okay, and that's a great thing that Studio has implemented. Okay, it's a safety measure. So, what you would have to do to set these things up, okay, going into inventory, all you're going to do when I say set them up is add the item. You're going to click the blue button and then this will all come up. Okay, you want to put in as much information as you possibly could. Okay, and if you didn't have pricing, you could leave that blank. These are just to get the defaults going. Okay, these will update as you purchase. You're not tied to a vendor, but you may purchase the same item from different vendors. I've seen that happen, but you'll have a full history of that once you have more info. There's a history tab. Okay, so we can also follow the trends for pricing. Not everything stays the same price. Okay, and we learned that in the pandemic. So 1, setting up the item. That's what I did. 2, purchasing the item. Okay, let me see. Did I not? Oh, maybe I put that in away. So the next item or the next step in this process is to purchase the inventory. Okay, you saw what I did. I went into projects. I clicked new item and this pops up. Okay, down here you can see this is where you're going to go for either of these. If you're purchasing inventory or selling it, you're going to just click one of these and I'll do that. So yes, I am purchasing inventory. So when I do that, I do have an inventory room list. I tend to do inventory based on month. That gives me a way to know when we purchased it. That's how I do it. But I also am specific on my naming convention in a way that I can find it too. So in this case, I would let it default, but I'll just put 001. Okay, do whatever you want. And I'm just going to say let's just say we're buying 1. to make it easy, right? And I'm going to save and close. Okay, so right now, nothing is in inventory. Okay, this did nothing to my financial statement. I like to show people the steps in this because it kind of gives us a better way of understanding the processes that we're doing, which I think is key. A lot of times people ask me how I find mistakes. I have a lot of very specific processes that I also like to teach. That's available in my mentorship. But I also like you to know the answer, because the thing about it is I can find mistakes because I don't need software to do this, but I teach people to be able to find their own mistakes. Okay, we're going to make them, but the goal is for you to find your own mistakes and correct them before anything is impacted. Okay, even from the higher ups. So let's see, there's nothing on here. You see there's no inventory. I just wanted to make sure that it didn't affect anything arbitrarily. So now going back in, now let's watch what this does. I'm going to go ahead and create a PO. Okay, creating a PO and setting up the item does nothing right now. Okay, this is not going to be an accounts payable. This is not going to be in anything. Okay, I'll show you that here. I'm just showing you each step because I think I might as well. Okay, if you look down here, nothing is affected. Okay, the numbers are still the same. But what happens when we go, like, in order for us to receive it, we cannot receive something that we haven't paid for. So we do have to pay for it, right? So this is where I said the cash credit or credit card would be affected because I'd have to pay this, right? But in a conversion where we already have one, where we we've already, we would have had it already, that particular thing, that particular adjustment would have been posted, and I'll show you. Whoops. I just want to pull up one thing. When you adjust something into inventory, this would be what happens when you do that, and there is a way to do that, is it will post to this inventory adjustment account. Okay. And the reason why these are in here was because of my webinar yesterday, so you can disregard these. But the reason why there's an inventory adjustment account, it's a cost account. Okay, so normally posting it, like when you're setting up inventory, the positive of this would have been to cost of goods sold. Okay. And then we would have gone through the motions of setting up the items. You wouldn't have to go in here and purchase each one because it would have been already, you would have done an adjustment into inventory, but you still would have had to set up the items in inventory. But the offsetting is going to be the adjustments that are made. Okay. But I do want to still walk through and show you what this would look like. Okay. And I am going to pay it from the cash account because I don't want to make it part of the webinar, but I want to just show you. Or actually, you know what? I will pay it out of the inventory adjustment account like I would have. And we'll see that it will be there. It will be in the negative, okay? So let me post that here. And we'll just do extended. This just helps me know what it was posted for. Okay, so I just paid it out of the inventory adjustment account. I have not received it yet. Okay, and you can see that, you know, we don't owe anything. Okay, so what this becomes when we put money down is a vendor deposit. Okay, this is a vendor deposit. And so the offset right now on the balance sheet is, well, it would have been the checking account if we reduced it, but I did it to inventory adjustment. So let me show you. And you're not going to see the offset because I'm pulling up the balance sheet, not the income statement, but Let me show you. So now what you're seeing here is, see how the net profit is now higher? It's higher because I did a negative coming out of inventory adjustment. Okay, that's what paid the account. So right now, all we did was pay for it. Okay, and the offset is vendor deposits. Okay, and I'm going to show you because my vendor deposits from yesterday were right here. So see how it was 12,386 and now it's 13,968. Let's see. So the difference is that 1,600 that we just paid on that. Okay. So I want to make sure that that's clear. Actually, I'll pull up the P&L and hopefully this isn't going to confuse anybody too much, but I think it's important. And for those that are accountants or interior designers that want to see it for the sake of seeing it, it's always cool. Well, the inventory adjustment is now higher because there was an amount, but now I did an amount, and I'll pull that up. Okay, it's still only affecting us by that amount. So let me show you. So originally I was showing a profit of 136.10 and 26, and now it's 132.210 26. So that's the 1,600 that we added to this. Okay, but watch what happens when I go ahead. So we've paid it, and now I'm going to receive it in inventory. I just want to show you what happens. And there was some expenses already on here, like we've purchased it before, but so just, you don't, it was still zero. Okay, so now I'm going to go in and receive it. I'm going to just do 20040, and I'm going to receive one. If I had the vendor invoice number, I would just use that. I don't. I'm just using the PO, if you're wondering. Okay, now look what happens. So we've ordered 3, we've received 3. I've sold 2 in the past, and we have 1 on hand. 1 on hand makes it 1,600 as my inventory asset. Okay, but what does that do to our books? Let me show you. Whoops. Okay, so now, okay, so it's a little higher than where I had it, but there's the inventory asset. Let's scoot down some. You can see how the profitability still remained with the 1,600? The reason why that's so is because the vendor deposits is now 12,386 because the 1,600 is now there, but we still have that 1,600 that's affecting that. Okay, and that's normal. That would be what it would have been had we included that in the original conversion. Okay, that it would have for sure changed the profitability in that way. Okay, so I want to just show you what that looks like. Actually, where that would have been was actually in the checking account, but I paid it out of that. So I technically could have just reduced this some, right? But I'm going to leave that there. If there's any questions at all about what I just did, definitely leave me a comment or reach out. I want to make sure that there are no errors or anything that's unclear. Okay, so that was a whole reason that I decided to make a follow-up. So that's the first thing. Okay, so just to make sure that we're clear, I did 3 things to get something in inventory. I set up the inventory, I purchased it, I received it. The only thing that took long was me showing you the steps along the way and how it affected our books. Okay, I wanted to definitely show that. So yes, the profitability is different. If I wanted to really make it the same again, I would have just had to decrease the checking. I didn't want to do that. Okay. So the other thing that came up was the checking account. So I want to touch base on that because I I just walked over it yesterday. So you can see that the checking account has this amount. Now, if there were amounts already accounted for, like for instance, this is why I always say to really review your bank recs and not just go through the motions. Because when you review your bank recs and you see anything, like for example, I'm going to go to the Chase checking under a bank rec and just show you. Okay, and these have a lot of voids because I was playing and cleaning up. See, so I'm going, usually when I'm working with anybody or cleaning up books, I'm going to make sure that everything that I can clear is cleared. Okay, and all that is truly left is what should really be there. Okay, and what we're looking at is that these books, and let me correct the top portion here in just a second. Okay, so this should be 177 now, 92, 30. Oh. Okay, so the beginning balance on this account would have been this total, and you see this is the bank balance. However, it is showing up as this total because we have outstanding entries. They are my adjustments because I was doing a webinar. However, I want to show you what would happen if we really were to have outstanding checks at an accounting conversion. Now, what you have to understand, and this is why I didn't choose to cover it over the webinar, I just walked over the process, is because when you post or write a check into Studio or any software or tracking, when you write that check, regardless of whether it clears or not, it is impacting the balance, right? If you write a check, we have to account for it like it's pending, it's in process. Okay? And when we do that, there are times that we might mail a check that we cut on the 20th, and maybe it doesn't get cashed till after the 1st, right? But that doesn't mean that we don't post it until it clears, right? We want to always account for that because, that's how we know if a check is lost or if, something was deposited into the wrong account. Whatever the case may be, this is why we do the bank recs. So if you're not looking at the outstanding at the end of the bank rec, for me, the outstanding is kind of more important. No, it's just as important as what cleared. Okay? You want to be looking at that. I often see people kind of go, well, I did all the bank recs, so it's fine. Well, if you're not looking at these, how do you know if something's a duplicate or triplicate or there's a void or a reverse? Okay, I always remind everybody, look at what hasn't cleared. Okay, so because this stuff attributes to the total. Okay, so that being said, if you had outstanding checks, what you have to know is the check was accounted for in the totals already. So when I said here, you're going to be going into money out, and I don't know what this is doing here, but yeah, I'm going to go ahead and just pretend that this was an outstanding check. Okay, so I'm going to just call it 1, 2, 3. I'm going to leave that as the date, and I will just say okay, so okay, I'm going to just make this simple, okay? I'm going to make it $100. Okay. And I'm going to show you. So what you have to know about these outstandings, okay? What I would have done in a case where a bank account had an outstanding, the journal entry for this piece would have been a different total because we would have had outstanding checks. Okay, that's why we print the bank rec reports, and I always make sure that these numbers, line up like they're supposed to. Because what I would have done, should that have been the case, is I would have entered a different total here, because when you enter the checks, and let me just show you. Let me go into a rec. Okay, when you enter the checks here, and we're starting on a conversion, and we're doing the first rec. Okay, what I want you to see is we are going to be selecting this piece. Like, I would be checking this piece off, so the outstanding check is the total. Okay, so that's how that is treated, because the expense account was already accounted for in the totals. So like if you wrote a check to rent and it was just in process, that's what that would look like. That means it already is coded and captured in the rent expense on the P&L, but you're just doing this so that way when the check does actually clear after the accounting conversion, you're able to go ahead and check that off, and you're not going to add yet another expense. It was already captured. Okay? So that's what I mean when I'm saying this. So I would have had a different total to begin with. Okay? Okay, I would have had a different total to begin with anyways. So that doesn't, and you can see that now that I even selected that, it didn't change anything. Okay, it just changed my beginning balance. Okay. Or actually, the beginning balance is not what's changed. It's these totals, but it's reconciled. Okay, the ending total hadn't changed. Okay. This was our beginning balance part of the journal entry. Okay, and this was when I cleared it all, so. Okay, so that is why that's there. Okay, let me see. So I wanted to make sure that you could see how the bank balance. So yes, this was the beginning balance, but if you look at the end of the day, the bank balance is different. Okay. But watch what happens when I check this. See how now the bank balance is there because I selected that we had that. Okay. That does not mean that the balance sheet is different. Okay, do you see that? Because these were already accounted for. Okay, and let me just show you what that now looks like. Okay, do you see how the bank balance hasn't changed? Okay. Well, hopefully that helped shed some light on that process. If it raises more questions than it helped, then I will probably make more content. But like, post, subscribe, please comment whenever possible. It helps my algorithm. Give me the thumbs up and let me know how I can help. Thank you so much.